Hey traders, Raghee here. Welcome to Charts and Coffee. Great to see you here. Happy Thursday, everybody. All right, so let's get into what we've got going on today. And where is my countdown trader? So let's take a look at what we've got going on today. I do want to remind everybody of a couple of things. One is we do have FOMC events. So let's talk about that. This is forexfactory.com. This is actually the calendar tab that you see here in front of you. And, make a pit stop at the site. Oh, the cat's making I don't know if you guys can see him. Cat's making a cameo in Charts and Coffee this morning. All right, so take a look at Thursday. And we have two events. We've had a lot of Fed speak consistently since last week. And you'll notice right with the bell, as if this is the nonsense we need, we've got a 9:30 Bostic event. And then as we have the European wind down, we've got Williams speaking at 11. This is, of course, New York time, Eastern time. And so remember, if you're intraday trading, volatility events. If you're end of day trading, potentially opportunities. If you're intraday, longer term swing trading, again, potential opportunities. Think about these events as just volatility events, not necessarily directional, although I do think the market might go back to a little bit of, if we saw what happened with Jerome Powell earlier this week, the market rallied on his comments. So as long as the members don't sound any more hawkish than Jerome Powell's message last Wednesday with the FOMC statement and the FOMC presser, we're probably going to be in pretty good shape in terms of those markets that are still strong, still in intact uptrends moving higher. Okay, so that is that. And good morning. Great to see you all. First question right off the bat. Hey there, James. How are you? After a breach of the clearing range in a double green market, am I still using the 1 minute to surf the wave? Yes. Yeah. That's not something that I think a lot of inexperience, because it's an active style. You've got to keep an eye on the chart. You've got to be sort of at the helm. But yes, that's definitely something that it's still one of, look, there's 5 pitches. And I'm sure some of you, if you haven't already been to one of the webinars, you know that I've got a day trading class coming up. You can check out yesterday's webinar. It was really kind of going past the one that we did last Wednesday and talking about day trading options with the same tools, the same process. You can check that out at simpletrading.com/spot-replay. And so if you were at those webinars, you know that I've been using the 5 minute to slow things down a little bit in 2021, using the daily time frame a little bit more to have a better idea of the path of least resistance, the directional bias. And really the question about the 1 minute, James, well, this is a directional bias question. That is the short-term time frame giving us an indication of maybe a nice little trend follow intraday? I'm changing time frames up this year as opposed to last, but the processes are still the same. The indicators are still the same, if not arguably a little bit better, because we've got the signals in them now. So I am modifying sort of the slices of psychology that I'm gauging this year as opposed to last. But you'll notice my charts are identical, right? I'm still using the same tools. That's always something you'll find on my charts. I'm always going to have the grab candles, which are free. I'm always going to have, either the wave and the propulsion. Some of these tools are just going to be foundation, just the bedrock of the way that I look at the market. And then we're just trying to improve the way that we can understand volume and time and volatility. So I hope that helped, James. And thanks for the question. Now, I'll be with you guys in the Sector Secrets room tomorrow morning, and we'll take a look at some of the questions that many of you have asked about the update of the watch list. Where is our focus? It's a much more compact world of trends that we have now. And then we're also going to talk a little bit about some intraday stuff going into the class on Saturday. So that'll be tomorrow for my Sector Secrets folks at 9:20 to about 10:45, 11-ish. All right. Okay, so moving on to our next question. Thanks, James. Good morning, John. Good morning. What is your present thinking on the recent movement in Amazon? Sure. I think what comes to mind is ketchup, right? Just catching up. Not ketchup, although I do like ketchup, but mustard and fries is highly underrated, by the way. But no, I'm thinking ketchup. It's playing a little bit of ketchup, and you look at the narrative that it's tethered to. This is your XLY consumer discretionary ETF, and Amazon, because of that relationship to the XLY, is, for better or worse, tethered to Tesla. Now, I've said for a while Tesla is a laggard, and it is. It had a great session, had a one up day. That's great. Had a really great breakout. Terrific. But it's got a long way to go before it can look like the heavily weighted stocks in XLC, XLK, and catch up even to just what's going on in the XLY. I do want to take a moment to mention Tesla because some of you know, if you're getting the hang of the 1, 2, 3 pattern that I've taught you all and talked about, Charles Dow, 1, 2, 3. Is it any surprise? Take a look here. Is it any surprise that we took out? Take a look at that swing high, Darvis. Look at how we accelerated through that level. I don't think that's just a coincidence at all. And then the synchronicity of yesterday. Take a look here. The synchronicity of yesterday's volume. So you've got a swing high, Darvis level, right? And you look at the volume that accompanied that break. It's a pretty good move in Tesla. It's impressive. That's the kind of momentum confirmation via volume that you want to see. But anyways, back to Amazon. You know, they are inextricably tied together because of the weighting in the QQQ tech and the weighting in XLY. But remember that Amazon is a very fresh uptrend. If the XLY weakens, if the QQQ weakens or stalls, it'll be a little difficult to take out this swing high. This is an obstacle to the upside, as you can tell. That is an obstacle to the upside. But, here's what the great thing is about the way we want to be exhaustion traders. I don't need Tesla to move higher at all. I just need it to pull back and then retrace its steps. That's it. Think about what you need the market to do to profit. And if all I need is a little bit of a pullback to support and then retrace its steps, that's a far more enviable place to be rather than buying up near the highs and needing brand new highs to realize a profit, needing blue sky, brand new highs. So it's not that my opinion is bearish of Amazon. It's just that where my strike zone, right, is on Amazon is very different. What I want to actually take a swing at is very different. This is to me, just the epic image from the great book, The Science of Hitting, by the even greater Ted Williams. And, we all need to be able to understand what that zone is for us. Which pitch do we connect with? Where is our best batting average waiting for us, right? And it's going to be different for everybody. This was Ted Williams, right? But I think the lesson here is, do you know what your zone is? And for me, that's the pitch. Does that make sense? So I think it could keep going higher. The way that we assess the environment, we were yellow through here. Notice we've gone from the yellow now to double green. So I'm in dip buying mode. Strength in tech is going to help. Strength in the XLY will help, and Tesla getting out of its own way, believe it or not, will also help. So that's why we break markets down in the sector secrets. That's why we break markets down even intraday. You're going to notice that when you're looking at my, say, 5-minute time frame and my daily or my weekly, there are very few tools that are not going to be visible on all 3 time frames. Because we're measuring psychology over a certain time horizon, not, the secret squiggle, as I like to call them, the secret squiggle that, is applicable to that one time frame. All right. So thanks for the question, John. I appreciate that. What are my thoughts on XLF? Dr. Nutmeg, I'll tell you what, I was super disappointed that XLF rolled over the way it did. There was very little reason for it to have rolled over that way, but it did. And we accept it. We keep our stop losses in place, and we move on, right? We also have to remember that broken uptrends are not, in fact, downtrends. And then the visibility of the JT trend sort of there to remind us that this is a sideways market. Yes, unfortunately, it's not the awesomeness of the double green, but the bias of this market is going to be influenced by the trend that was. This is very Dow 101, Dow Theory 101. The other thing to note is take a look at the V-score here. And what I'm going to point out is the fact that, take a look at the last time we pulled kind of close to the mean, We're not getting below the mean of the volume weighted average price on a Z-score. So these are the standard deviations of VWAP. We're not getting below that. That's inherently bullish. We're way above the 200 exponential. That to me is on the, what I would call the bullish hemisphere of the market. And so now really it's a matter of, can we find oversold buys to take advantage of? Or, for example, if my radar is looking at XLF, do I have relative outperformers? And we do. There's about 3 names heavily weighted in the top 11 within the XLF that are relative outperformers. And American Express, my friend, is one of them. So Dr. Nutmeg, XLF, yes. AXP, heck yeah, right? So thanks for the question. Moving on to looking forward to the day trading playbook. I am as well. I cannot wait because it's really all new material that, yes, is still built on the foundation of the 5 pitches. But how do you recognize the pitches with the new signals? It's far easier. What are they communicating? And then we're going to do a deep dive into how to analyze the longer term, the dailies, the weeklies, because directional bias in a market like 2020, that was a no-brainer. That was just, the buy everything. All the tides are rising like a full moon, crazy. What do you do in a market like this when you've got to be far more discerning between which indices are in uptrends, which sectors are in uptrends, which stocks, like we just talked about, are relative outperformers? And how do we know that before the bell rings? How do we know that there is a path of least resistance in a stock? And I think a lot of day traders are often surprised that answer does not come from the short-term 1, 2, 5, whatever minute time frame, but rather the daily, and in certain calculations, even the weekly, right? And I think a lot of intraday traders will find that the dailies are going to give them an edge over intraday traders that don't look at the daily. And a lot of traders who've been wanting to get really good at intraday and end of day, yeah, you're going to find that it's very much interwoven. Being a really great end of day swing trend follower and being a really good intraday trader, those skills overlap. So why not kind of double your skill set and improve your skill set across all time frames and time horizons? To me, that's optimization. That's taking the trading day and finding the most effective ways to extract money from the markets. All right, so next up is let's see, we've got XLF. Hey there, Alex. So back to the XLF. I entered XLF yesterday on a Ready Aim Fire. Okay, great question. Great question. So Ready Aim Fire or a slow stochastic, this is what I love to do. And I love Mr. David Starr's Ready Aim Fire tool. It's probably the best choppy market indicator. It's a premium tool. So if you don't have it, a distant second alternative would be a slow stochastic. But when I get a market that's oscillating, if I can use, so what I like to do now, for those of you that haven't caught the replay yet, please do. And if there's anything that sort of was the thread that stitched that whole thing together, it's have 2 or more, as I like to say, whys. Have 2 or more reasons. Again, I have to say, channel your inner Simon Sinek. Know your why. Not just have the whys, know your whys. And if you have confirmation, that means you've got, for example, in the case of the XLY, Alex, you've got the ready aim fire, preferably syncing up with, in this case, a Darvis signal. Let's take it a step further. What if you can get the Darvis signal, the ready aim fire, and then confirmation that we're still above the mean, which is a meaningful in the XLF. So you're just stacking your Ys. You're having multiple Ys saying one is confirming the next. So we're in the right environment. Okay, well, let's go one more level deeper. And all of this is color coded or just automated with signals now, which I personally love. So then I look at the underlying environment. It's sideways. It's sideways coming after a double green. That tells me we're neutral, but with a bullish directional bias. You can have a non-trending market still have directional bias. So I've got a neutral market, bullish directional bias, which immediately tells me let's buy oversold markets. And do you see how we take one tool after the other, and it's all pointing to basically the same thing? So yeah, I like that. But I will say, so Alex, well done. I love that you're, thinking about how to take advantage of some of these great, trend breaks, but find reentries. But also think about the handful of stocks. And I know you know how to do this, right? So think about the handful of stocks within the XLF that are actually relative outperformers, like American Express, and even borderline, although it's not as good as American Express, but even borderline names like Schwab. So I like it. And I think in choppy markets, there's probably very little that will outperform, again, chop, not compression, but chop. I think there's very little that will outperform Darvis and Ready Aim Fire together. So good stuff. All right. So next up we have, I've had this question a number of times, and I'm happy to address it. What happens when you have a Darvis pattern, not the box, right? Not the line, but once the lines are set, the lines are set. So remember, there's sort of two components, and we'll get into this more in the class on Saturday. But there's two components to the new Darvis Signals version, the 3.0 as we call it, right? The signals are far more aggressive. They're front running the actual Darvis support and resistance line. Once there's a line, there's a line. And if you're ever concerned about that, you always you can wait for the candle to close, especially on a daily, right? But whether it's intraday or end of day, the signals are different than the actual, if you want to call it the box or the channel or the support and resistance lines of the Darvis. The signals are different. They front run it. They're actually actively seeking out a specific pattern that the Darvis formation needs. And if the criteria intraday or intracandle, if the criteria intracandle is met, the signal will pop up. If the criteria is broken because of the natural ebb and flow of price action, the signal will disappear. So remember, it's front running the actual Darvis. Now, let's go back to what I mentioned before, talking about Alex's question. Never will you hear me say, just simply step in and blindly buy any one tool. Why do I have price-based tools, volume-based tools, volatility-based tools, and then, overarching all that, how does time influence all of that? 4 factors. So if I were to simply buy a Darvis, which looks like, oh, wrong, I'll just buy all the Darvises. Yeah, but is the Darvis in the wave? Is it happening in a double green, right? You want multiple reasons, 2+. So for those of you that are wondering, can I just buy the Darvis? I wouldn't recommend it. I don't do it. This is my tool. And I'm telling you, there are better ways, higher probability ways to use the tool. So I hope that makes sense. I mean, I can give, I look at my husband's toolbox in our garage, and I don't know how to use 80% of what's in there. I look at this, oh my gosh. He knows how to use them, right? So having the tool is clearly step 1. Knowing what to do with it is step 2. And that's a lot of what we'll dive deeply into. But keep in mind in the meanwhile, Jordan, underlying environment, color of the grab candles, 2+ or more Ys. And so when you start stacking everything up, you'll see Oh, okay. Now I can see what's a really great, multiply confirmed signal as opposed to one that's sort of maybe got Darvis only or Darvis and whatever, right? And you'll learn how to stack this up. You'll learn how to confirm. And I don't mean paralysis by analysis. We're talking a checklist. We're not adding more arbitrarily. We're saying, hey, it's actually a filtering process to keep you from trading. Darvis, check. Are any of the other boxes checked? Nope, no trade. Right? Darvis checked, or as Alex was talking about, ready and fire. Okay, what about the underlying environment? All right, what are the color of the grab candles? Where's my V score? Etc. Where's my VWAP? You get where I'm going with this? And then intraday, we start talking about HPMRs, and we can start stacking those into the conversation too. You'll find the best trades will actually have an overlap of those 4 factors: price, volume, volatility, time. So I hope that makes sense. And I know I've run over, and thanks as always for being with me here for Charts and Coffee. Check out the replay of last night's webinar. I think a lot of the questions that I'm seeing will be answered by that webinar. I'll see you all later on today in the futures room and then also in the options room. Again, reminder, we've got a bonus session in Sector Secrets tomorrow morning. I'm going to give you guys a little bit more of a sneak peek of some of the day trading, and we'll continue to fine tune our current watch list. And again, reminder that we've got two FOMC events. They could not be worse in terms of timing. Right at the bell with Bostic and right at 11 a.m. with Williams. There could be some interesting setups, but remember, it's a caution day, much like yesterday. Remember how the market started to sell off in front of the 11 a.m. Bostic event. This market is going to be very concerned because they don't know how the Fed is going to communicate the current message, and by way of all these other members whose names are not Powell. Be careful. Know your calendar. I'll see you tomorrow. Be good to each other.